Take a look at this chart. It shows us the performance of the US dollar index in the first 6 months of each year, going all the way back to 1968. Green bars means the dollar has strengthened in the first half of the year, and red bars means it has weakened. Now this bar, right here, represents the dollar's performance in 2025. From January 2025 to June 2025, the US dollar index has fallen by 10.7%. This marks the steepest first-half decline for the dollar since 1973. In other words, the US dollar has just had its weakest start to the year in over 5 decades. And we happen to think that the worst is yet to come for the dollar, which could have massive implications for risk assets like Bitcoin. After all, the US dollar index, also known as DXY, has historically had a strong inverse relationship with Bitcoin, meaning when the dollar falls, Bitcoin rallies. And when the dollar strengthens, Bitcoin usually struggles. For example, the dollar dropped sharply in January 2017, March 2020, and October 2022, and each of those instances coincided with a strong rally on Bitcoin. We saw the exact opposite in January 2018 and May 2021. Both times, the US dollar strengthened, and that coincided with sharp declines for Bitcoin. We can see just how strong this inverse relationship is through this chart, which shows how sensitive different financial assets are to the US dollar. Bitcoin has a sensitivity of nearly negative 1.5, meaning that over time, it has typically moved about 1.5% in the opposite direction for every 1% move in the dollar. Of course, that doesn't mean Bitcoin reacts exactly this way on a daily basis, but on longer time frames, the inverse relationship has been consistently strong. For comparison, emerging markets come in at negative 0.8, gold at negative 1, and the S&P 500 at negative 1.03. So Bitcoin has the highest inverse sensitivity to the dollar among other major asset classes, which means if the dollar continues to weaken from here, it would be a strong tailwind for Bitcoin. Weakening the dollar has become a strategic priority for the Trump administration. The goal is simple: make American goods and labor more globally competitive by lowering the value of the dollar. And we already have clear evidence of this shift starting to take place. For instance, Donald Trump has been very vocal about the need for the US Federal Reserve to cut interest rates, going as far as to call for a full 3% rate cut. Trump has been applying pressure on the current Fed chair, Jerome Powell, to ease policy. And according to recent reports, this pressure has made Powell consider resigning. Trump is set to appoint a new Fed chair by May 2026, someone far more aligned with his views on monetary policy and one willing to cut rates aggressively. Part of the reason is that Trump may actually want US interest rates to fall below global rates as a way to intentionally weaken the dollar.